Wonderful good day, ladies and gentlemen. We are in Zurich today here at the roadshow of TerraceEnergy. And we just saw a fantastic presentation of the company. And I take, of course, the chance here to interview Dan Carrier, the chairman of the company, who is with me here. Dan, thanks for taking the time. Thank you. First of all, I said it, a great presentation, great company so far. I had, a small idea of your company, but I really must say I like what I see. Give us a short overview about it, please.
Well, thanks for that. Yeah, TerraceEnergy is a U.S.-focused energy explorer and producer. We're focused in the Eagle Ford Trend down in Texas. So very, very hot play, very exciting play. An area that a lot of the majors are in, having tremendous success. So excited about it, you know, and Terrace is really a company that's looking to take advantage of the U.S. energy independence theme that's gripping investors across the world. So exciting times, lots of things to do, busy times.
And you're exploring and producing oil and gas, right?
That's correct, yeah. You know, a company at our size, we need to take our time at the start. We've done that for 2 years. We've now put together a tremendous acreage package within this play area. A lot of good science, a lot of good proof of concept, and now we're really starting to put it into development. So more drilling, more production, and real good ramp up on where we are today. But yes, we are produce about 1,000 barrels of oil equivalent a day right now, looking to really roll that upwards in the next couple of years.
Okay, let's dive a bit into your project. I presume infrastructure-wise there is absolutely no issue because you're quite near to Laredo, to Houston, etc. So there shouldn't be any issue on that. Where are your properties in detail located? What is the basin like? I think it's the Eagle Ford basin, right?
Yeah.
And what is the structure about?
Well, that's a good question. You know, we are in the Eagle Ford basin. We're not specifically an Eagle Ford player, which is a formation within that basin, but we chose it on purpose for its strong economics. And it's real simple. The strong economics are a fact that the infrastructure is in place, operating. So all of the companies down there, the big ones, the small ones like us, none of us are investing large dollars in infrastructure. We're capitalizing on infrastructure in place. As a result, we're getting top dollar for our hydrocarbons. Our crude sells at $5 to $8 over WTI quoted prices.
Oh, wow.
It's a very sweet, light crude, and so it's used as a blending agent.
That's what the market is searching for, right?
That's what the market's searching for. And the refineries are searching for it to blend it with not so light, sweet. Great economics. The gas is all sold at top dollar because of the infrastructure and pipelines in place. As a result of that, you know, we're seeing $58 to $60 cash flow margins on a barrel of oil equivalent. So that's the blend of hydrocarbon, the crude, natural gases, and the liquid natural gases. So,
what are the resources and reserves so far? I presume you have a 51-101, right?
Yeah. Last year's 51-101 has got us at about 8 million in reserves. That should probably double this year. That is a forward-looking statement, but we're 1 year later. Our reserve report is being drafted right now.
So you're working on it already, of course.
That's of course right. Yeah. And you know, the exciting thing about that is that the drilling locations that we've compiled, the acreage packages that we've compiled, and if you extrapolate out, you know, the upside of that reserve is quite extensive. That's what's got myself very excited, a lot of our senior team very excited, and we're going to look to add more acres to our package in this year and next year. Yeah.
So how does it work when you go, let's say, into production? That's one thing, but how are you doing? You're doing it all by yourself. You are partnering with companies. Do you have to finance everything by yourself? How do you manage it?
Sure. No, our strategy is to have anywhere from 30 to 50% of a project. So we will always partner. Right now, we're partnered with a company called Blackbrush Oil and Gas. They're out of San Antonio, Texas. Our operations are all out of Houston, Texas. So very close. We work on a lot of projects together. We're going to be working on all the future projects together. In the case of our huge project, it's a 147,000 acre project. It belongs to Shell, and we are earning in 50-50 with Blackbrush on that project. It's a great relationship of a humongous company and two smaller ones. We're figuring out a lot of the early science. We're figuring out a lot of the completion methods. And then we have a big partner around as well when things need to really ramp up. So excited about that project. Excited about a lot of things we're doing with Blackbrush in the other formations. One of a key takeaway for investors about TerraceEnergy is we're not just another Eagle Ford shale player. What we are going after are the other formations that are fed by the Eagle Ford shale. So we're able to get into these things very inexpensively because it's kind of leading edge, it's the next one. And so we're early movers in the other formations that are very prolific, just like the Eagle Ford. We do have Eagle Ford. We're very excited about our Eagle Ford project. But I see the real opportunity in Terrace as being a first mover in the other formations.
Okay. So question is obviously also, how do you finance the whole thing? You have $13 million roughly in the bank, but you said it already, you are producing by now 1,000 barrels of oil equivalent per day. I saw that you are targeting for this year up to 2,400. So that means that you will produce something like on an annual basis, 850,000 barrels roughly. Yeah. Of course, with that margin, that would cost something like $50–60 million. Into as a cash margin, so that's a very nice amount of money, of course. But do you have to still finance more because you have to drill more wells? What is the game plan?
Sure, it's a little mix of both. Right now, we're cash flowing about $1 million a month, which doesn't pay for a $6 million well. But keep in mind that we're 30% of those wells. Now, on the big expenditure this year, that's really going to drive that 2,400 barrels of oil equivalent a day by year end. That's coming mostly from project drilling. So we've gone through year one of proof of concept, year two of delineation and showing repeatability. Now we have a model. That model now calls for 13 wells this year on that project. That won't be drilled with Terrace equity. That'll be drilled with Terrace project funds. So effectively a low-cost loan that drills off these wells as we go. That'll ramp up even more in 2015. At our other projects, the next well we drill is a very inexpensive well. It's about a $3 million well. It's in a formation called the Buddha Formation, which we're real excited about. And we've got lots of cash on hand for that. And don't forget that we are partnering in these things. So we're sharing costs, 30 to 50% of that. But down in this location, what's really compelling to me as a big investor in Terrace is that in the first 4 months of production, 50% of our cash flow comes back into our treasury. So unlike 18 years of the mining business that I was in, where we drilled holes and drilled holes and drilled holes and never had a dime come back, I can't tell you how wonderful it feels to drill one well and 50% of my money comes back in the first 4 months.
I believe that.
In 18 months, all of our money is back. So as we grow in scale and wells that we've drilled in the project, these wells will then start feeding off themselves. And that's where the big payback is from. So it's capital intensive early, and then, off we go into a growth phase after that. So of the $30 million worth of wells we'll be drilling on the Almost project with non-equity money, probably 16 to 17 million of that flows back in to be reinvested into the next well. So, we hopefully, once we get enough wells going, have a nice rolling thing. But it is capital intensive. There will be a point later this year where Terrace will have another equity raise. Hopefully with a strategic partner, more so than a public offering. That brings another partner to the table and helps in the growth of the company as well.
Okay. What are the plans, let's say, for the future? Because I saw management is something like 35% share of the company, right? So you have you are sitting in the same boat as your shareholders. So I presume you not only want to reinvest, on some day you want to have a dividend, or maybe you want to sell the company. What's the game plan on that?
Yeah, so going forward, there's multiple ways to monetize things for shareholders in any company. But in Terrace's case, we have projects at different stages of development. And in 2 to 3 years, they'll be at an even different stage of development. Some will be in the monetization phase, where it's the appropriate time to sell it to a bigger player. If we can get most of the projects there together, it would probably make more sense to sell the whole company to a larger company. So we would look at that point. But if it was a rolling asset sale, one at a time, an interesting thing for shareholders would be to maybe dividend some of that back as a one-time event, and then have a lot of capital left to redeploy into the other projects. So we would look at that blend, that balance. It may not be the best thing to do for the company, but then again, it may be.
Okay. I saw Canaccord came out with a nice research report. They got you a $3.50 price target, which is something like, 50% higher than today.
Yeah, well, Canaccord Genuity out of their New York office covers us. It's our first U.S. coverage, which is quite nice. One of our goals this year is to be listed down in the U.S. on a senior exchange. We're listed on a junior exchange, but get a senior listing down there this year. Canaccord Genuity and a Canadian company called Cormark Securities both cover us. And we are, I would say 2 more analyst reports should be out this year. A lot of analysts are talking to us. A lot of analysts are very compelled about what I said earlier about, the first movers and the other things. So going well so far. The story is really liked by the analysts, and, looking forward to some more.
Yeah, so hopefully you will reach the targets, because it would help everybody in the company.
Yes, yeah. What you always want to do is, when you get close to the targets, make sure that you're doing enough to have them lift the targets. That's the secret. Yeah.
Perfect. Well, then, thank you very much for that. Keep fingers crossed that everything goes well, that you drill more beautiful wells, producing immediately nice amounts of oil. And we look forward to follow your company, and all the best for that.
Thank you. Great to be here with you. I look forward to keeping in touch and being part of this.
Super. Thank you very much, then. Thank you. Ladies and gentlemen, that was Dan Carrier, the chairman of TerraceEnergy. You heard it. The company is exploring, but at the same time already in production, 1,000 barrels per day so far. The target is for this year 2,400 barrels per day. And of course, to do more, they are reinvesting. They will maybe have to raise a bit more money to really grow the company faster and to make it even larger. So management has 35% of the shares, of the outstanding shares. I think that's a big commitment from the management to the company. And as far as I know, I think you are even not taking a salary, right? No, just remember. No. Yeah, so even Dan is not taking a salary. He is working for his position. That's also very unusual in the field of resource companies. So also highly appreciated on that. Have a close look on the company. Make your due diligence. Thanks for watching Commodity TV. Bye-bye.